Hey, Mike here. I just sold 3 positions, and I want to talk about what I think is going in the market. But first, let me talk about the positions I sold. It was SSRI, IAG, HL, and you can click below this video and get my spreadsheet to see the full details of what I'm still holding in my account and everything. There's only 3 things I've sold, and I sold SSRI for a 7% loss, IAG for 4% loss, and HL for a 12% loss. But IAG, it got killed today. Luckily, I bought it somewhere. It must have been right here somewhere. It went up a lot, but it had awful earnings today. Well, they weren't that bad, but analysts downgraded the stock. It got crushed, and I sold these 2 other positions because they're trading weaker than the market, and I wanted to reduce my overall market exposure a little bit because I think in the short term we're likely to see the stock market go lower, although I do think we're like 1 or 2 weeks away from a major buy signal in the stock market. So let me explain what's going on in the short term, why I'm a little concerned about the short term, where I think ultimate support is, and then why I think we're on the verge of a big buy signal. But first, the short term. This is the S&P 500. Of course, last week it fell real hard after the election. It's tried to hold up after then, but it's failed. And yesterday it dropped, and then today it's trading down again, just a little bit, nothing big at this point. But let me show you the Dow real quick too. It's the same story there. And the NASDAQ. Now, two things that bother me is, one, the markets basically have fallen to give up 50% of the gains they made since June, which that typically acts as a big support level, and it was. Then it broke down. The NASDAQ is acting weaker than the other market averages on this correction so far. Now, what bothers me though for the short term is the action in the VIX. Yesterday, the VIX was down. The day before, the VIX was down, while the stock market didn't drop. And with the short term in a correction like we're in, that's a short-term negative. That's a sign that too many people are trying to guess the bottom. And when you see a correction, you want to see the end of it come with a lot of fear in the market. Now, obviously, last week when we had the 300 down day, that was a sign of some fear in the market. There was a day of panic selling. But after it occurred, the fear didn't maintain itself, and too many people were trying to guess the bottom, from a contrarian standpoint, that's bad. And that's what showed up in the action in the VIX. And I think that's why we're seeing the market continue lower today. So what that means is I can't look at the VIX and the put-to-call ratio and say, yes, we've seen the end of the correction. Now, there's 2 ways corrections can end. You can see the market bounce and then come back down to form a successful retest, a double bottom, and then have fear come down, increase on that retest. Or you see what you had here, essentially a panic drop, and then the fear come in. So one of those 2 things is going to spell an end of the correction, and there's a risk that the market's going to go lower and bring that fear into the market. So if that happens, though, we do have solid support on the Dow here around the 12,530 level, which is the lower 200-day Bollinger Band. The same situation is for the S&P 500. That's about a 5% move lower for the major market averages. That's not a massive disaster if it were to happen. And the NASDAQ actually may start to outperform a little bit better than the other market averages if the market goes lower like that. Because some of the stocks that are critical in the NASDAQ have fallen so much that they're starting to try to hold up now, Apple being the poster boy for that sort of story. So what I'm saying is, short term, we may see the market go lower here. Now, another key thing that I think says that we're on the verge of a giant buy point in the stock market, no matter whether the market goes lower here or bounces up first and retests or whatever. The Investors Intelligence Survey and other sentiment surveys showed a big jump or a big decrease in the number of people that are bullish in the stock market over the past week. You can subscribe to Investors Intelligence real time by going to investorsintelligence.com, or you can get the results in Investors Business Daily updated. I think they update theirs every Wednesday, but I pay to get the real time results from Investors Intelligence directly. And this morning, the number of bulls dropped down to 38.3%. They reached a high of around 55% around September here. And in the June the 5th, the report they come out, like I said, every Wednesday morning, but on June the 5th, the number of bulls dropped to 34%. And that's the lowest reading they've had all year. At that time, the bears were at 26.7%. It's very rare for the number of bulls and bears to be even. That last happened last year in around October at some point. I'm not sure if it was exact. I think it happened right before the bottom, if I remember correctly. But the market dumped and then went sideways, and people increasingly got bearish, and the bulls decreased on that sideways movement. And then this survey gave a big buy signal right here. There were either more bears than bulls at that moment, or even. And the same thing happened the year before that. Right here in July, right before the market. Oh no, I'm looking at the wrong time here. It didn't do it on the exact bottom, but the market. Oh, this is the bear market. Okay, here's what I want to talk about. It happened here in July of 2010. It didn't happen on the exact bottom of the correction, but it happened right. No, actually, it was right here in August or so. That's right. It was happening in August, not on the exact bottom of the correction, but right before the market took off. And it happened here at some point. But bottom line is, when the number of bears become even with the number of bulls, that results in a massive major buy signal that doesn't even happen once a year. It last happened in 2010, or 2011, then in 2010. And it hasn't happened yet this year. It didn't happen in the bottom in June, July. So what does this mean? If the current trend in that survey, the way it's moving, continues, in probably 2 weeks, there'll be an even number of bulls and bears. At the least, we'll see the number of bulls drop to the level that they occurred in this summer. That could even happen potentially next week if the market were to continue lower here. So here's what I'm trying to get at. Two conclusions from all this stuff I'm trying to tell you here. One is I can't look at the market right now and say we've seen an end of the correction. It may, to be able for me to tell you that, we need to see the market break down and the VIX spike up and then have some sort of reversal like it did in June. Right here, right? We haven't seen anything like that. In fact, the VIX has traded lower recently, which is a troubling sign, which is a warning that the market could dump. The Dow could fall. I think it's another, potentially, another 200, 300 points. And I think that type of thing is what would happen. Or conversely, we could bounce and then have a retest and some sideways action, then turn up in December. But either way, I don't think, we're in a downtrend. We're either going to stabilize and go sideways or have another panic drop probably in the next few sessions, bottom before Thanksgiving or so, or right immediately after. And the trend in the Investors Intelligence suggests a major bottom signal in that in the next 1 to 3 weeks. But regardless, short term, the short term action is always very murky to call, but it does seem to me the correction trend is going to end and we'll be in a new uptrend in the stock market sometime in the first half of December. So I sold those 3 positions to lower my exposure in my account, to get out of this IAG, which dumped, and some other stocks that are acting weaker. So I'm going to be able to be in a position to buy more. I may even move a little bit more money in my account too, but to buy in December and get back with an increase of margin and exposure in the market in December. So that's what I'm doing, and I think in December we'll be having a big buying opportunity to get into the market here, or to buy new positions, or to have this trend change where instead of this asking every week, when's the downtrend going to end, which is basically what we're asking each other now, right? We can't identify an end to it, so we're asking, when's it going to end? When's the signal going to come? I think in December we'll have a clear sign that it's over, and we'll have an end of the year rally that will go into well into months of next year. And Investors Intelligence Survey is suggesting that we're on the verge of a major buy signal in that survey, like we saw in June and then saw in October of last year. Now I want to talk about some of the world markets and the U.S. market too, because what happens after this correction is over? Let's look at the U.S. market first, because this is real interesting. Let's assume the market bottoms. Let's just assume it bottoms down here, or even bottoms today. But somewhere between the 1350 and 1300 level on the S&P 500. Let's say we bottom there in that range somewhere. Well, and then we go up in December and start a new uptrend that lasts, let's say, to May, just argument's sake, and then that uptrend tops out. What would happen in the stock market? Well, let's look at the long-term monthly chart. So if we were to bottom down in here, let's just say 1350, all right, and then we rallied up into next year and topped out somewhere in the market made a new high and topped out at 1510, 1550. I would suggest that if the market does that afterwards it would have another correction that would last for several months and take it right back down to probably where it is today. It may, go down to 1300, 1250. I don't know. But what you would see in that case is a market environment similar to what we saw between 2004 and 2006 here, where the market would break out at times and rally up to new highs and then come back down. Yes, it was going up slowly over a couple years, but it wasn't having these massive rallies like I think we're conditioned to experience here, like in 2010 or last year from October to the spring, or even from June to September. The overall market action would be very subdued, and in my view it's similar. Let's see if I can go back far enough. It's not a good chart. It would be similar, in my view, to what the stock market was doing in the 1970s here. In a range and going sideways and not doing a whole lot. And then finally at the end of that, the market bottom in 75, and then and it had a cyclical bull market to like 81 here, and then it broke down, and finally this whole thing was a secular bear market, right? And it ended in 1982. Well, what happened in these couple of years, the market just basically didn't do much, and inflation exploded during these years, and finally the Fed was keeping rates low, and then finally it pushed rates up to stop inflation, don't remember exactly what the Fed funds rate went to. It was like 12 to 14%, and created a final cyclical bear market that marked the top in gold and commodities and paved the way for the next secular bull market. And my contention is that we're really in a similar market environment now to what happened back then. And so I think, we're still in a cyclical bull market starting in 2009. I don't think it's really going to end for a couple years until the Fed jacks up interest rates and kills it. But from now on until then, I just think we're kind of like in a weak bull market that's going to be punctuated with corrections like we're in now, and then moves higher. But the bulk of the gains were made from 2009 to 2011, and then this ride was much weaker than the last one. I do think we'll finally get a blow-off rally like we saw in 2007 here, but I don't think it's going to happen for a couple years. So, in other words, the U.S. stock market, I think, is dead. I think it's going to bottom here. This correction will end, and we'll get into a new uptrend sometime in December, first or second week of December, and then a move higher for several months to take us back up to the highs and get rid of these losses everyone's experienced. But after that, I just don't think it's going to do much. But, this is a long discussion I've given you to get to my main point here. Money will be made outside of the United States. And I'm going to repeat what I've been telling you. It's going to be made in commodities. It's going to be made in gold. It's going to be made in European markets because they're all in a completely different position than the U.S. stock market is in. To give you one example, the Irish stock market, this is Ireland, is in a stage 1 base. In a position, it's edged up to the upper part of that stage 1 base, pulled back just a little bit. It's holding up just fine, and it's a position to break out on the next uptrend, which I think is going to start in December for the whole world. As the U.S. stock market, this correction is either going to end right now and go in a sideways quick 1 or 2 week transition and break out, or give a final panic bottom and then transition to a new uptrend. But bottom line, new uptrend begins in December, and markets like Ireland will break out of this stage 1 base it's in and begin a new bull market that's going to last for several years. This market can go up 30%, 50%. It can double next year, while the U.S. stock market merely goes back up to its highs and doesn't do much. And we've seen that. We've seen a similar breakout occur in Greece right here. The Greek stock market is pulled back sharply after doubling, but I think it's fine. Here's the thing. These European markets are all in a position to break out of stage 1 bases next year, begin the move back up to the base in December, and break out of it at the end of December or next year, and just go completely crazy. Here's Italy. Here's Spain. Here's Austria. Look at Austria is one of the ones that looks the best. That's in a position to break out before this year's over. If not then, in the first quarter next year, just go nuts. Belgium, Russian stock market's acting a little weaker right now, but I still think it can bottom out and do the same. Bottom line is you got world markets, and look at the world stock market ETF, that it's in the same sort of position to break out, whereas the S&P 500 is in a position to bottom out and go back up to the high and whatever. So, and of course, gold itself is acting stronger than the U.S. stock market's been doing that since August, and the resistance on GLD is at 175, and today gold is actually up, acting better than the U.S. stock market while it's down, but it can break out of this base it's formed here and go completely nuts and make a new leg higher next year. And gold stocks are down today because of some bad earnings, and AIG and I think Anglo American had bad earnings, or AU had bad earnings. Yeah, it's gapped down. Anglo Gold, I mean. But that's fine. It hasn't given up half its gains like the Nasdaq has, and I expect it to do fine next year and break out of this September high. And if it breaks out of the September high, it's going to go nuts, and that's what we're looking forward to next year. So, bottom line, I think a new uptrend begins in December. How we get there isn't completely clear. Do we get there by making a new panic bottom or going sideways first? I'm not sure, but the Investors Intelligence survey is trending in a way that suggests it's going to make a massive, major buy signal. That survey will, and other sentiment surveys will, within the next 3 weeks, probably 2 weeks is my guess, and then a new uptrend will begin. And for the United States, that just means a move back up to the highs, minor new highs next year, and then probably another big correction, but giant, the next phase, the real bull market starting in select world markets. So that's what we're looking forward to. I sold 3 positions today, so I'm kind of putting myself in a position to do additional buying in December when I think this uptrend starts, or I see a clear sign that the downtrend's over. So that's what I'm doing right now. I'm simply sitting here. I'm waiting for that. And when it occurs, I'll be putting out PDF reports next couple weeks for Power Investor members. And once the correction is either over or the uptrend begins, plan on doing a special mastermind session to talk about it for the Power Investor members. So anyway, it's a summary of what I think is going on, and I think it's important, this presentation, and I'll be talking to you later.